Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by BrightPath Notes. Now, here's your host, Justin Bogard.
Hello out there, and welcome to episode number 10 of the Be the Bank podcast. I'm your host, Justin Bogard, and today I have a guest, my friend, Tracy Rewey. Going to be on today. We're going to be talking a lot about seller financing, how you buy it, how you sell it, how you get rid of it, and all the things that go around seller financing. So stay tuned. You're not going to want to miss this. Tracy, how are you?
Hey, Justin, I am well.
Thank you so much for being on my podcast. I'm really excited to have you on because I haven't had you on a podcast or anything I've done before on video before. So this is big time for me.
Well, I'm excited to be here. Thanks for having me.
All right. Tracy, our listener and our viewer, they might not know a lot about you. I know a lot about you, but I'd like you to go ahead and kind of walk through your kind of journey of how you kind of got rolled into this business, this real estate note business, and kind of fast forward where you and Fred are today.
Well, I'd love to say it was a big master plan, but really it was sort of by accident. I was a small town girl living in a lonely world, right? In a very small town in upstate Washington by the Canadian-Idaho border. And I worked for a real estate attorney that did closings. And up in those rural communities, there's a lot of seller financing. That was my first exposure to seller financing. Somebody used to pay us to go down to the courthouse. I'm going to date myself and look at the microfiche records and pull off private transactions where the seller sold the property and let the buyer make payments to them. And then fast forward a few years, I moved to the big city of Spokane, Washington, and I went to work for a company that bought and sold seller finance notes. And that was in 1988. And the gentleman I went to work for had already been doing it for 30 years.
Oh my gosh.
Yeah, so it's been around longer than people think. That's what he did.
Yeah.
He bought seller finance notes at a discount. And I worked for them for about 10 years on the institutional side using my closing and title background. And somebody there introduced me to this handy dandy financial calculator, and my mind was blown. I was like, oh my goodness, you can do that. You can do that. And so after working for them for 10 years, I started, co-founded my own company with my husband, Fred Rewey, in 1997. And we've been doing seller finance notes, buying and selling them for ourselves since then. And, if you do something 34 years, you got to like it to keep at it. And I love notes. I do. So I'm happy to be here and share the love.
Right on. Thanks for sharing all that. And you did that very quickly. I don't know how you rushed through that. That was like I don't want to date, like you said, I don't want to date you, but there's quite a few years there to where you had a lot of progress in the note business.
Yeah, I know nobody's here to hear about me though, right? They really just want to hear about notes. How can I make notes work for me? So I only mention that because I have been doing it 34 years and I understand the nuances of the documentation, the talking to the seller, how to use time value of money. And I like to break it down in ways that people feel it's approachable. It's something that they can do and use for their own well-being.
Absolutely. Yeah, and thanks for mentioning that. I did want to, before we get into our discussion, I want to get a quick question out there because I noticed you put, for those of you that are listening on the podcast, we're also recording this and you can view it on our YouTube channel, the BrightPath Notes YouTube channel. And Tracy Z, as she's known in the business, she has this noteinvestor.com after her little name on their tag. So I want to ask you, is noteinvestor.com, is that one of your businesses that you're promoting for people to kind of sign up for and do stuff with?
Yeah, that is sort of our passion project. Noteinvestor.com is an educational site, and we have over 300 free articles and videos, and we just share information about seller financing. When we started that blog in was a little before 2008. Blogs were kind of new and there wasn't a lot of
Hmm.
information out there that people were sharing. Now, fortunately, we've got lots of great information like your podcast. But that is just was our way to start giving back and get a little bit exposure on the internet as well. So anybody is welcome to go to noteinvestor.com. One of the things we do every year, I'm so excited about, we just recently released, are the annual seller financing stats, which I know we'll talk a little bit about today. So when we get into those stats, if anybody's like, I'd sure like to see a copy of those, they can go download it for free off our website at noteinvestor.com.
I know one of the blogs that I see out there, and I know you kind of repeat some of them, but one of my favorite one is the blackjack hand, the image of the blackjack hand, and the 21 investment. I don't want to say rules, but 21 investment. What is it?
Yeah, 21 tips for note investors just starting out. Yeah,
no,
those
are
favorite
great
too.
Yeah, I like that. Every time I see that imagery on social media, I'm like, oh yeah, that's that blog I read. I love that blog. So yeah, keep bringing that stuff out there, and that's what I love about what you guys do, Tracy and Fred. Both of you, I think you mentioned this already. Fred is your husband and your business partner as well, and you guys do a great job of marketing this stuff and getting education out there and dumbing it down to a level that's be like, oh, okay, I get it now. I don't have to have this, economic background from Harvard or something, So, because I've watched you and taken some of your courses as far as how to use the financial calculator and calculate time value of money. So I would highly recommend folks going to the noteinvestor.com website and signing up and looking at some of those free tools that you have. And I think you have some paid courses as well, right?
Yeah, we do. Thanks for mentioning that. Yeah, we do like to educate, share knowledge. I guess I approach it from that direction because when I learned the financial calculator, I didn't have an economic background. I didn't have a college degree. I did like math. My husband does not like math, but he always says, I don't like math, but I like money. So that was his motivation for learning the calculator. And it's very freeing and empowering. And that's one of the reasons, especially, you get in your 50s, you're like, I want to share knowledge for more than just making money. I want to help improve people's lives. So it's fun to get to do that.
That's awesome. So I want to talk about seller financing next. I know that's one of your favorite topics, along with partials and hypothecations and stuff, as well as mine. So we align very well with the way that we think and what we like in the note business. And so I'm primarily investing in first lien performing mortgages, and I prefer the kind of seller finance, what I call the mom and pop paper, as opposed to institutional paper. It's a lot more challenging, but I just like it in general. So you mentioned that you came out with some numbers or some stats for 2021 as far as people that originate seller finance paper across the country, right? And give us a little bit of flavor of what those numbers look like.
Absolutely. So seller financing was our bread and butter back when we started in the 80s, and the bank institutional paper came along more after the 08 to 2010 subprime mortgage meltdown. But for years, we just survived on the mom and pop seller finance paper. So people are surprised for some reason to think that there's still seller financing out there, because let's face it, we are in a red hot real estate market all across the United States. So people are paying cash, they're offering over asking, they are waiving inspections. So it wouldn't surprise me or anyone if seller financing actually declined last year because of all of that. But when we run the stats and we track these every year with the help of advanced seller data services, they're pulled from the county courthouse records where these recordings happen when real estate's sold and a mortgage or deed of trust get taken back. And we found out that there was actually a 15.9% increase in the dollar volume in 2021 over 2020. So there was 27.3 billion with a B in dollars. So that was a big increase. And we might go, well, we expect the dollars to go up because real estate prices went up. That'd be a reasonable assumption. But when we ran the counts, the number of seller finance transactions actually went up as well by 7%.
That's incredible. So let's talk about that for a second. So, and I agree with you, when COVID happened, you would think that, the kind of every economical aspect of our country kind of shuts down or diminishes or shrinks in some way, shape, or form. And obviously that wasn't the case for seller financing. So real estate got red hot, right? Because supply was so short, it just shot up appreciation so much. And I think it's continued even since then. and
Yes.
still appreciating today. And of course, in certain markets, it may not appreciate as fast as other markets, but you can speak for Florida, but I know in Indiana, it's pretty steady Eddie. We're appreciating 3, 4, 5, 6, 7, 8% in some areas. So it's pretty nice, which makes this more challenging for the affordability factor for that everyday, we'll call them the blue collar borrower.
I agree, and that's the segment of the market seller financing has always served so well. So why do people seller finance? It's because either the property or the buyer, the person, didn't qualify for conventional financing. Now, there are times when a seller will intentionally create seller financing because they want the interest income, they want the tax benefits of an installment sale. But as you mentioned, that's usually a smaller percentage than the mom and pop. We kind of track that, and people who are professionally creating notes, more than 2 in a 12-month period, are only about 14% of the market. Whereas mom and pops, like you mentioned, that just create one note in 12-month period, they make up about 86% of the market. So we think about, why does seller financing happen? And those are the main reasons. The people or the property don't qualify. Well, one area that has troubles getting bank financing are those more affordable homes under 150,000. Of course, we might have to raise that number, say affordable homes under 200,000, right?
Yeah, exactly. Yeah, with depreciation, right?
Because something called Dodd-Frank that was supposed to protect all the consumers out there from predatory lending, which something needed to happen and change, but in doing so, they made it almost impossible for banks to make those lower bandwidth properties to be financed. And so seller financing really is one of the only options for some of those more affordable homes, which is sad. And I'd like to see that change. And I know there's a lot of people making efforts to that. But the good news is, when you work in seller financing, you're often giving people an opportunity to own their home that would otherwise be renters.
Yeah, that's what I love about it. I'm talking to sellers and to sell me their notes, the mom and pops, and I'm hearing stories about their borrowers, and that's exactly why. It's like, we couldn't sell this property because of the real estate, if you will, and we found somebody that wanted to buy it. They're motivated, and they had quite a bit of money to put on a down payment, and so they were able to put on the down payment. We carried back the terms, and we were happy with it.
Yeah, and then they're happy for a while, and then they would rather be cashed out, and that's where you and I can come in and buy that note at a discount and give the seller some money and let the buyers keep making their payments just like usual on their way to owning that home free and clear, and we get to make a nice profit in return.
Yeah, so let's talk about that for a second. So fast forwarding to us buying the note. So my experience lately has been actually talking with the borrower and getting their story and their feedback, and then I'm actually able to listen to what they say, and I'm actually kind of modifying that note before I'm buying it as well, because there may be certain things about it that they didn't like. Maybe they want, I don't know, the payment date to change. Maybe they want the term to stretch out a little bit longer. Maybe they want the interest rate to be lower. Whatever the case may be, I'll make those changes for them, and they're just like, oh my God, this, they're so grateful, they're so thankful, they're so appreciative, and then boom, I got me a very good performing loan that I can have a borrower that I can depend on here in and out, because they remember what I did for them.
Yeah, that's very true. We are in it to help everybody. It really can be win-win. I know people say that and roll their eyes, but you really can make that happen in this business.
Exactly. Sometimes it's a win-win-win, right? We win, the borrower wins, and the seller wins, because they get cashed out and they can move on to their investment.
We talk about this. Oh, go ahead, Justin. I'm sorry.
No. I interrupted you. Go ahead.
Well, I was going to say, we were talking about the sats, and you say they put a really good chunk down. And that's something that always surprises people too, because they always think seller financing, that's all these zero down, back from the 80s, zero down, that sort of a situation. But really, on the residential side of owner financing, the average down payment last year was 23%. And it was almost 30% on commercial and land. So that's a sizable chunk of down payment that these borrowers have. Now, yes, we do see deals with less than 10% down payment. We'll look at those. We like to see other factors in there, like some seasoning or some credit or some appreciation, because we've been doing this 30 plus years, and deals with less than 10% down are the ones that traditionally have a much higher chance of default. So we're not looking to take the property back. We like to have a performing asset. Of course, if they don't pay, we'll work with them to try to get back on track. But if ultimately, if you buy a note and they don't pay and you can't get them on track, you can offer to do cash for keys for a deed in lieu, or you can go through the foreclosure process. But if you are in a note too high investment to value, when they have low equity, that's when you potentially could lose some money. So we look at those lower down payment deals more carefully. And that's when one of my other favorite tools come into play, when there's a lesser down payment, and that's a partial purchase.
Sorry, I had some noise in the background. I had to mute myself there. So, which is probably good because I wouldn't interrupt you during your conversation.
Well, you got to interrupt me. I talk a lot, so you got to interrupt me when you want to say something.
I just want to listen. I just want to listen. I want to be the person in the audience listening to you up on stage, like I do at all the events that you go to. So, you brought up a good point about the down payment. And I like how you presented that, and I'm glad that they had stats to show that, because that is a big eye opener for people I talk to. They're like, why would you buy a seller finance note? Like, isn't that like a borrower that you can't depend on? I'm like, you'd be surprised. They're kind of more dependable most times than some of the institutional or FHA paper, maybe the VA paper. It's just funny how it works out. But yeah, I like what you said also about the down payment, as far as if it's a low down payment with hardly any seasoning. Well, that note is pretty risky, and you probably should price that correctly to reflect that, versus having a large down payment with low seasoning. I don't mind taking a flyer on that, if you will. I give the scenario. There was a note I bought here in Indiana. It was $100,000 property, and the guy put $50,000 down, and the owner carried back a $50,000 note, and it had one payment on it. I was like, okay, I'm in. I'm very well protected here, as far as if something goes sideways. Yeah, I may not make a lot of money on it, but I'm well protected, and that's the security, and the risk is what one of my big sticking points are.
Yes, and that borrower is probably not going to default, because even if they got into a tough situation, they've got so much equity, they'll do something to protect it,
right,
or they can sell the property and get out whole. I'm just curious, was that a single family home, or was that an odd use or land, or what was that deal?
It was what I call a foreign national, and it was a single family home. The borrower was foreign national.
Excellent. Yeah, nice 50% down. So we do see a lot of seller financing in states that have the ITIN, the I-10 buyers, the foreign nationals that have a little bit more trouble getting traditional financing. And so that's another segment of the market that seller financing serves.
Yeah. So you mentioned before about microfiche and kind of your opening bio package there. And I started laughing to myself. I was like, you know what? I haven't been in the real estate business that long. Truth be told, I've only been in it since really 2015 as far as a full-time real estate investor. And I haven't had the pleasure to go to the county office to research documents. So when I hear you talk about it and others that have the seasoning that you do in the business, it's fascinating to me what we have today with technology versus what it was like before this technology to go research this stuff. And the pace is so much slower, I bet, than it is today. I don't know about you, but you can probably look at a deal right now and have a couple websites you can go to check valuations. You could probably underwrite that file as far as a soft quote, probably within a few minutes. Would you agree?
Absolutely. Yeah. So anybody who's not watching, there were definitely air quotes over that, the pleasure of going to the courthouse. So yeah, if I never step foot into one again, that's fine by me. And I agree with you. That's one of the things that is very beneficial about the internet is we can do this business from anywhere. We have the tools as long as we've got an internet connection. We spent about 7 months in Guatemala, Nicaragua, Italy. And so you can do this business from anywhere, especially when you buy the note, then you use a third-party loan servicer to collect the payments and keep track of everything. And so it's a very flexible business, and I do love that it's all online. That makes me very happy to see that progression of the business.
Absolutely. So when you're buying this mom and pop paper, I always find this challenging. I find it fascinating and interesting how you're able to collect the documentation you need to really go through the due diligence of discovery, what I call it, before you actually close on the file. So I'll give a soft quote based on very little information, right? I'll throw out a number, see if it sticks, and it sticks. And then I'm assuming there's going to be some problems with it because I have a little bit of experience now with what to expect after you get the deal kind of the handshake going, right? So collecting that documentation to me is challenging. So it's getting the insurance information, if it's even insured, or even if somebody has the insured, or if they're even the mortgagee on the policy. I'm talking about the seller here. It's getting the pay history is always comical, because I will see either Venmo, I'll see a Cash App, I'll see, bank statements are obviously my favorite, because those are easy to look through. Or I've had people have handwritten receipts before, and it's just so funny how people will rent a house and they'll screen their tenant, but they won't screen their borrower, and they'll go through a seller finance transaction, and then they'll just get like handwritten little receipts with their mortgage payment. It's just so funny. Do you find that common when you do seller finance, or when you buy mom and pop paper, that you have the similar history with pay history?
Yes, we have the same challenges getting copies of documents, getting proof of payment history. There are a few states that have done a nice job of making it fairly common to use a servicer, especially out west. A lot of the title companies will have their own little servicing. But besides that, most of the time that buyer just sends the payment or delivers cash to that seller, and you have to recreate that payment history however you can. If you can't, then you have to rely on the other aspects of the deal to get confident about it. And that's one of the things we bring to the table after we buy the note. Now this buyer borrower can have an established payment history. A lot of times it can improve their credit if they ever do want to get refinancing, and they get their mortgage interest statements, and they just get that feeling of, I don't have to worry what happens to the seller. When I pay in full, am I going to get a release? So I think that's that level of professionalism we bring to seller financing. And if I could change one thing, having used to be a title closing background, is that every seller finance deal that closer or that title company, that attorney would help them get it set up to somebody to service it, because that would make all our lives a lot easier. But until then, we do our best to figure it out. And the recent thing since smartphones came along, all the sellers want to lay their documents on their bed and take a picture of their smartphone and text it to me. So I've seen a lot of bedspreads in the last few years. I just want you to know, if you need any redecorating tips or not to do tips, just let me know.
My favorite is when they take a picture of those documents and it's so damn fuzzy that you can't even read it. And then you feel bad asking, look, I'm sorry, you're going to have to take a better picture, because I can't read anything on there. It's like it's just a blur. It's like their phone or something just turns it into a low res image that's, you just can't even read it. So fun times. But this is why we get such a big discount, right, Tracy, on this stuff, because we know the challenges of going through to get to closing. And then after actually having to fix anything on there, I'm always having to fix or adjust something on there. And you mentioned about the pay history. That pay history is obviously one of the most important things that we need to make sure we go through discovery with, laser focus on, because you don't want to screw that up, because some servicers are a little loose about, how they want to see that pay history. Some servicers are like, nope, I want to see it to the penny. I want to know exactly what the principal and interest was on that date of that payment that came in. And so you kind of have to have your A game when it comes to that. So I agree with you. If perfect world, if seller finance steers would just use a sort of servicer, this transaction would be so much smoother.
Yep, then I guess everybody would do it. So
that's true. That's true. It's just me and you out there, I guess, are the only ones doing it, right? But so you mentioned let's talk about exiting out of these deals. So a lot of times I find there's great opportunities with these seller finance notes, these mom and pop notes, and you could run into several of them at the same time that you're wanting to buy, because they're great deals and you got good salesmanship and you're able to get a soft quote in there with some numbers that really work for you. But then, some of us are only working with so much capital. So then you have to keep in mind, like, how am I going to be able to take down this deal and still make money on it if I can't take it down with my own money? So what are some of the ways that you do that?
If it's a transaction that we personally don't want to buy, but another investor will, we do work with some institutional bank funds that will buy seller finance paper. So I don't think there's any problem referring it to them and earning a referral fee. Yep. That would be one aspect, especially if you're getting started. It allows you to earn while you learn. The place you want to be eventually, if you can, is that you buy the note and then you can sell off a portion of that note through either a partial or through a hypothecation where you borrow against it, where you can get your capital back an investor gets a nice yield on their portion that they're buying, and then you get some money on the back end. So if you can do that, now you're playing on house money, if you will. You get made whole. And if you put that into a financial calculator, you'll get an error 5, because if you're able to get whole and still own a piece of that cash flow, you just have an infinite return. In my book, that's the best kind of infinite banking that there is out there, especially if you do it in a retirement account where it's tax-free or tax deferred. So that is the ultimate strategy, that is to do it that way and to stay in it. And then, as we mentioned, the hypothecation, where you could borrow against it as well. There's a little bit more risk there because you are also obligated on it, whereas it's not just the payer on the note and the property itself. We've used that as well. Lines of credit where you collateralize is another type of hypothecation. So those are all ways to get capital. It might surprise people, though, that they can start out if they can find the deals. There are lots of us who will buy those deals and pay them a referral fee at closing. So I think the biggest takeaway is if you can control the deal source, like in any industry, the money will follow it.
Great point. Control. I've always, one of my mentors has taught me that, and he always tells me, you want to control a portfolio. You don't necessarily have to own it. You just want to control it and be in control of it. And he's right. Like I look at every deal going into it, assuming how do I take control of this, and do I have a way to exit out of it? Do I keep it in an account? You mentioned hypothecations and partials, and we talked about that for a little bit. And I want to kind of segue into that part of the business. And what I end up seeing, and I don't know if this makes sense to you or not, but in, let's say, a cash account versus a retirement account. So in a cash account, I kind of prefer to do the hypothecation as opposed to the partial. To me, it just kind of seems like I can get like maybe a cash on cash return if you want to use a metric like that. I know that's not the right metric to use. And then a partial I like to do in the retirement account, because I feel like I'm just going to get that money in the future and I can't touch it anyway. So the partial ends up being a great play for me in the retirement account. Now, I have done partials in the cash accounts as well. I don't know what your take is on hypothecations like that.
I think that I would agree 100% with that. In addition to the tax implications, there's also a situation with your IRA where you don't want to be perceived as doing business in your IRA because there is an unrelated business income tax there. So I try to keep those transactions out of there. I know there's ways to do it and to report it, but for me, I just like to keep it clean. So, are you playing with future money? Are you playing with today money? So if it's like you said, cash on cash, immediate cash flow, I usually like to keep that, including the referral fees, outside of the retirement account. Anything that's a long-term investment play, I like to put in the retirement account. There's pros and cons to both, but I agree with you. I think it's cleaner and it makes more sense, and you have more control of the cash outside. So it's important to get that cash reinvested all the time, so you have a little bit more control on that too.
Yeah. I like, with the hypothecation, my favorite part about it is that if you do have money left over in the deal in it, that money is earning you a pretty nice return versus what it was as you had all of your money in the deal. So I call it like the small balance, high velocity return model there, where you can just accelerate that cash. That's probably what my assignment is going to be now. I'm going to model that and show the hypothecation thresholds there of how much you can accelerate a small amount of money and make just an ungodly amount of return versus what you can using the full amount of money you have to invest with and making, a reasonable return. So
absolutely. I mean, that's what the banks do. Your podcast is Be the Bank, right? So that's a great segue into exactly what you're talking about. That's what the banks do. They don't have to keep all that money on deposit. They get to put it out there. They get to borrow against it. They get to play with the overnight funds and all these great things. And they're just controlling a lot with a little. And so if we can figure out how to get velocity and control a lot with a little and just keep repeating that then you're being the bank, but you're doing it as a mom and pop, and you're helping people at the same time.
So I jump back a lot. So I want to jump back to the seller finance conversation when buying it, because something I kind of want to hear you talk about a little bit is your expectation on closing on these deals. Obviously, you have variances and variables in here that are going to change that. But typically, if you had all the information from the borrower, how quickly can you close a mom and pop deal?
2 weeks, but most averages is 3 to 4 weeks, just because I've never seen a deal somebody just said, here's all my paperwork, here's my payment history, and here's my old title report. And like, oh, okay, great. I'll get you a check in 48 hours from my IRA. That would be great. But we've got to pull teeth to get the payment history. We've got to get copies of documents. We've got to figure out where that original note is. Oftentimes that gets lost. We got to find it. And then we want to run an update to the title report, and we want to get eyes on the ground, or boots on the ground, eyes on the property to see if it's in good condition, the value. And if there's no third-party payment history, we do usually like to have a nice hello conversation with the buyer borrower at the seller's permission, of course, just to let them know what's going on, make sure they're happy with the situation. Most sellers are honest, but sometimes they forget to tell us things. So the borrowers or buyers usually will tell us things if the seller forgot. And then we're ready to go to closing. And we like to use a third party to close it, because I want their documents before I give them my money, and they want my money before they give me their documents. And so we used to use a third party, that usually a title company that is the intermediary. So, in a perfect world, under 2 weeks, but on average, it's 3 to 4 weeks.
Okay, I'm glad you walked through that very quickly and very well articulated, by the way, because that was a lot to unpack there. So I'll try to be quick about it. But the highlights of it is that there's a lot of I's to dot and a lot of T's to cross in this process, versus if I bought it from, let's just call it a professional note investing hedge fund, to where pretty much everything is pretty much ready to go. And it's really up to you just to make sure that a couple of things are checking out properly with, aligning with the title search and stuff. So the differences between buying a loan that way versus buying a loan this way are night and day. I think we can say you can probably close a loan with a hedge fund probably within a week if you had your money ready to deploy and you had your inspection and your title report is really the longest factor in that closing process. And then what you were talking about with seller financing, there's a lot of things. So I'll give them a homework assignment, right? I'll have little tabbed bullet points and say, I need this, and this. And oh, by the way, the alternative to that is this. And you don't get that the next day. It may take a couple of days for them to respond to you, and they may throw you 1 or 2 items there, and you have to follow up with them, be like, hey, I'm missing items 4 through 14 here. Where are those at? And they're like, oh yeah, I'm working on that. So it'll take me like at least about 1 to 2 weeks to get all that information finally. And then you're right, another 2 weeks to go through the check of it, to build that pay history to make sure it's going to be boarded with your service. There's a lot going on there. But this is the reason why we get such a good discount on these deals, is because we know the work we have to do to them. So like you said before, there's pros and cons to everything. And I think if you're looking for some good quality deals to be able to do a lot of neat things with, seller financing is really a great way to find deals to make good money, to either hold yourself or to even, as we call them, flip or broker, or even partial hypothecate. And I just find it fascinating. And I'm really shocked that more people aren't in just specifically the seller finance business.
I think another piece, and you definitely mentioned it, alluded to it earlier, is that buyer borrower on seller finance, I see to be a more committed emotionally buyer. I have seen with the financial paper, because I've bought some of that as well, that's from the institutions, that they are a buyer borrower, knows how to play the game. And when I say that, I mean, oh, I got behind a couple of months. Oops, I know you'll extend and modify. Oh, you're not going to extend and modify. Oh, I'll file bankruptcy. I'll say, do you have this document or that? All these things that might be a defense against foreclosure. So they play the game, the system. How long can I live in the house and not make a payment? I mean, we saw a lot of that after 2008, 2010. And I have seen, for the most part, not always, but the buyer borrowers on the seller finance are so appreciative to be able to be a homeowner, not a renter, that they are pretty sincere and dedicated. And so that piece of it I like, even though I don't like having to build a nice collateral file, as they would call it on the institutional side. And it just seems to be my area where I shine. I like the people and I like problem solving, and we get a nice return in the process, and we get quality paper.
Yeah, you're I don't know what the right word is, a puzzle tier, right? You're putting a puzzle together. That's what I feel like when I'm underwriting these deals. Like, oh my God, I got this, that, this, and I have to have my own checklist to keep myself in order and organized because I'm gonna have to keep them organized as far as getting the stuff, because that's the most important part about buying those deals is right when you're going through due diligence and going through closing. Because if you do everything right the correct way, you don't really have to worry about a lot after you buy it. It's kind of set it and forget it mode after that. So.
Yeah, and I think if anybody's listening, the big takeaways is, taxes, title, and insurance. If I think back about what's bit me the most in my 34 years of doing this, it usually comes down to taxes, title, or insurance, and of course, documentation, the paperwork. So we always look at the 3 Ps when we're looking at the transaction: the people. So that's the person making the payment that we're relying on every month to make the payment. It's also the seller that's selling us the deal. Are they honest and trustworthy? So we've got those people. Then we've got the paperwork, like you talked about, the note, the deed of trust, the taxes, the title, the insurance. And then we've got the property. So if the people don't pay, then we rely on the paperwork to give us the ability to take back the property if we have to. Always our last resort. But you line those 3 Ps up, and then you've got a good transaction. Perfect. Hey, I got one more P I'm going to add: partials. I always say 3 Ps, and I'm going to add one more: partials.
Right on.
That's a better PPP than the payroll protection plan, trust me.
That's the other one I was thinking of. The 4 Ps of the seller finance note business.
That's right. There you go.
Tracy, we're going to have some fun here. I'm going to transition into a different segment. So this episode is brought to you by BrightPath Notes. Tracy, so I mentioned earlier that you live in Florida, the sunny Florida weather. You said you're from you grew up kind of, I guess, in the west coast, maybe not the west coast, but you said out west. So where exactly did you grow up at?
I grew up north of Spokane, Washington, on the Canadian, Washington, Idaho kind of corner up there. So very cold and wintry, and a very small town. And then, like I said, I moved to the big city of Spokane, where I went to work for an institutional note buyer. And it's different out west than it is here. When I moved from Washington State to Florida, my mom was wondering, she's like, could you get any further away? And then I lived in Guatemala for a while, and she said, I'm not going to ask that question anymore.
Did she take the hint? Take the hint. I'm moving further away from you. Just kidding.
Well, no, I love her very much. I just, it's opportunity, adventurous spirit, and always got back to see. And I still travel back there. Fred and I were married in Coeur d'Alene, Idaho. It's a gorgeous place if anybody ever gets out there. And so we always travel back and see friends and family out there. We love it in the summer, but I have to admit that the winters are a little nicer here in Florida.
That's right. If you and Fred and your daughter had to live anywhere and do this note business still, you didn't have to be anywhere else, you could just stay in one spot. Since you've been the world traveler here, where would you be?
Wow, that's a good question. I don't think I'd want to commit to one spot forever, but I might be Italy. We liked Italy pretty well. But, I like the United States. We have lots of awesome things that happen here. So, you could just live in an RV and travel all over, right? And then you don't have to pick a spot. I think maybe you could relate to this.
I can't. I just hook my house up to the truck and I just take it wherever I want. Wherever I land, wherever I stop is my place, man.
I see why people are snowbirds, because I love up north in the summer, and I like down south in the winter. So I could see being both.
So you and Fred, I look at you guys, obviously you both are note investors, you have note investing business, but what I see you guys shine better than almost anybody else that I know that's in our space is really marketing. And so how did you guys get to be so good at marketing?
Well, thank you for that. I have to give Fred credit for that, because I was definitely the numbers documentation, and he is definitely the marketeer. And I never liked the word marketing. I would cringe when people would say marketing and sales. That just wasn't my thing. And he helped me a lot by shifting my focus to being of service. So can you be of service to people? And in providing a service, people are attracted to that. So if that's your messaging and marketing, then people are attracted to that, and that you don't have to sell, because they will decide that's what they need or want. And that shift was fundamental. So now I do like marketing, because how can I get a message across that's going to help people? That's something I can get behind. So that shift was big for me. He helped us get into the technology land. So I've learned to embrace technology because it does help us market well and easily at an affordable price.
Awesome. So running a note business is obviously just like running a business, if you will. And so I want you to give kind of our viewer / listener here any sort of book or any sort of podcast, if you will, or any sort of educational format that you think was very beneficial to help you.
I love the old school. I mean, they're sitting back here, right? So I love the old school Invest in Debt by Jimmy Napier. I know that's an old school book, but it really helps understand the cash flow concept. And I love the book Atomic Habits. I think for running a business, that is, and just organizing your life. And I love The One Thing. So those are kind of like my 3 go-tos. I recently started reading some other books by Dan Sullivan and Ben Hardy. What is Ben? I think that's his last name. Yeah, Benjamin Hardy. I love The Gap and the Gain and Who Not How. So I think any of those things are really fantastic to get a list and implement the most important things in your business and not get distracted by the things we like doing, we want to do, the shiny object syndrome, squirrel. So you treat it like a business. If I give anybody one piece of advice, is you here, I'm giving it to myself, right? You've got to market, because the deals aren't just going to land in your lap. And so you have to find a marketing style and message that resonates with you, that gets across to people so they can find you.
Absolutely. Tracy, thank you so much for being on the podcast today, episode number 10. I thank you very much. And I hope I get to see you in person sometime soon. I know with the COVID and the travel schedules and stuff and conferences, there has been a lot of opportunity, but I hope the next time I see you is very soon.
Excellent. Maybe this fall, right?
Yeah, definitely a Note Expo. Definitely a Note Expo.
I'll be there. All right. Sounds good.
I don't know if I'll be any summer conferences this year because I'll just be traveling, the nomad here.
That's what life's about. Enjoy that. You get to take your business with you. And I really appreciate you having me on the Be the Bank podcast. Thanks, Justin.
Yeah, thanks a lot, Tracy. And we will catch you soon. Everybody, this is episode number 10 brought to you by BrightPath Notes, and we will see you next time.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our BrightPath Notes channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by BrightPath Notes. Thanks again for listening.